This person is going to be just sharing with you incredible value, what you can do in e-commerce space, not by selling just products.
You'll make more money selling your business in a portfolio roll-up and exit versus trying to sell your business individually.
He's an MBA graduate, international best-selling author in e-commerce. Welcome to my podcast. This is Anatoliy Labinskiy, and today we have a special guest who is doing successfully flipping stores for himself and his clients. And this person is going to be just sharing with you incredible value, what you can do in e-commerce space, not by selling just products, but even selling whole businesses, buying them and selling them with the extra profit. Welcome, Josh Mardes. I just want to share a bit more about him, who is he and what's his background. So he's an MBA graduate, international best-selling author in e-commerce, and several entrepreneur, has been heard or seen on Entrepreneur on Fire, super fast business show, and on the several stages of traffic and conversion summit. He buys e-commerce stores, e-commerce businesses, manage them, scale them, and reselling them in average from 12 to 24 months with the awesome profitability for the clients and himself. Let's welcome Josh. How are you doing today?
Hey, how's it going? Anatoliy, it's great to be here. Thanks for having me on. I appreciate it, man.
Oh, I appreciate to see you on the podcast, because I believe this kind of subject, that's gonna be something juicy. Let's get started and just share with us. What was the beginning? When and how have you decided to go exactly on this sub niche of e-commerce? And what was your first cases?
Yeah, well, I was running an agency, a successful agency from 2013 up until late last year. But over the past few years, probably starting in about 2018 or so, I really had a seed in me to really go in this direction, where I actually built a portfolio of companies. And then I was managing them and also benefiting from them and then selling them. I was first inspired by this company called Native Commerce that was owned by a digital marketer. And I was very close to digital marketer, being one of their first 12 certified partners. So I was close to Ryan and Roland and Richard, and spent a lot of time with them in late 2014 and also throughout 2015 as they were first putting together the certified partner program. And I just saw what they were doing, and I was just like, okay, that's really smart. And so I was like, at some point, I want to go in that direction. I want to actually have a portfolio of businesses instead of like working for others essentially and helping build their businesses, which I appreciated doing. But at the same time, I'm opportunistic, I'm hungry, I have big goals, and I wanted to move toward that direction. And I had a mentor tell me, you need to sell your agency. And I was like, what? And I wasn't quite at that point just yet. Like, I envisioned having my agency for a few more years before I sold my business. But he told me, hey, it's time. You need to do this now. If you want to go in the direction you want to go in, you want to accomplish the personal, accomplishments you want to accomplish, you need to just go and sell your business. I'm like, okay. And so from that point on, from early 2020 until late last year, I was focused on trying to sell my business. So I went through lots of stresses, lots of pains in doing so. Although we had a tremendous growth year in 2020, I think that the additional pressure was a positive. And I went through literally 5 different letters of intent to buy my business or partner up with me. One of them did get past that in early 2021. This guy, Adam, and we partnered up. I sold half my company to him. But unfortunately, we just had misaligned expectations. He also wasn't meeting his financial requirements timely. And that was just all causing it just to unravel and just not work out. And then in late 2021, I had another guy that seemed very promising propose to buy my business and bring in 2 other businesses, so we can form this Ecom aggregator with a software component due to one of the owners. And it was really exciting. It sounded like it had a big vision. We even went to New York City in December of 2021, pitched the business we were building together to this bank. And this bank was like, we're in. We want to support you guys. We want to help you guys raise money. It was, proposed that we could possibly raise about 50 million in 2022 towards this ecom aggregator that could be worth about $1 billion to 1.5 billion in about 18 months. So very exciting. But then unfortunately, that fell apart early 2022, and I saw it coming. And as I saw it coming, because of what was happening between 2 of the other partners, I was like, you know what? I'm just going to take the bull by the horns. I'm going to transition my agency. I'm not going to keep delaying this any further. I'm going to stop selling services, stop getting clients, and I'm just going to really just move my focus towards buying businesses using what I've been learning over the last 6 months up to that point from Roland Frazier and Adam Lyons of the EPIC program.
Skills pushed you, yeah?
Well, Roland and Adam Lyons in the EPIC program were instrumental in helping me learn how to buy businesses and how to get sellers to sell their business and how to get favorable terms. I've been still learning from them. And I learned so much over the last year and a half now when it comes to buying businesses. And then coming into 2022, when that fell apart, so I had some businesses already underneath letters of intent to buy. And the terms were a little bit like bigger terms when it came to the cash that I'd have to put out up front, because I was under the impression we were going to get a certain amount of money from that bank that said that they wanted it in. But then when the whole deal fell apart because two partners that couldn't come to terms with each other, I instead went back to the sellers that were selling these businesses that had committed to selling their businesses to me. And I renegotiated those terms, got the terms down to more favorable terms. This way I could personally move forward with it. And then I moved forward. And those were the first few acquisitions. Then from there, we just built our portfolio from there. Because we've been buying about 1 to 3 businesses on average every month. And we've also been bringing on investors as we buy these businesses to help fuel the operation and also scale the companies as well by creating more leverage in each of these companies through the additional credit support that our investors give us in our companies. And we've just been doing that like clockwork all year. And that's been working for us.
And in this case, how you were inquiring them? I mean, okay, you got the skills, you understand the system, but for example, some of the businesses are cheaper, some of the businesses more expensive. Were you buying them on cash, or you making acquisition deals where you become an equity partner or something else? And what was the average price of the first businesses which you were acquiring?
Sure. I mean, the first few businesses were somewhere in between 100 to 150,000. Those are the first 4 were between that range. And they were somewhat steals, but they were also beat up Chevys. I learned a lot from these beat up Chevys, put it lightly, because now we don't buy businesses like that. Those first few acquisitions, in a way, were mistakes. Some of the businesses have worked out, but some haven't. And I've had to let go of some of those businesses just because when a business, as you know, being a marketer, advertiser yourself, when marketing and advertising is off for several months and then you step into that business, that's a very challenging position to be in. There's a lot of work required to get that business back into a healthy position where it's generating revenue and profit consistently. And those were the situations we were stepping into with those first few acquisitions. With those acquisitions, we got the terms down to where there was like very little cash up front, if any, which is great. So we definitely pulled off that zero down promise that Roland Frazier markets. We were able to do that with our first few acquisitions. But since then, I wouldn't say it's common. Since then, we've been buying bigger businesses up to 1.5 million. We've been really targeting only profitable businesses on day one. Like, we don't buy beat up Chevys anymore. It has to be like a reliable vehicle for us to step into it with no debt or very, very little manageable debt. So we've definitely learned a lot in a short amount of time throughout 2022 to make sure that we're in a position to win every single time.
So, and all the deals are mostly buying in cash, no like percentage collaboration?
We either buy into a business and partner up if we see the opportunity. Like, we've got a few partnerships right now we're working on closing. We've closed some other partnerships as well. If the situation is a good situation for us to partner up, then we'll propose that. It depends on the motives of the seller. Like, if the motives of the seller is to have more help, more support, more financial leverage, they've had a tough time scaling past a certain point for quite some time, then I might propose to them that we partner up, and then I'm able to get them to sell me 50 to 60 or 75% of their business. But then in other cases where the seller has the goal of really getting out of the business 100% because they want to put their focus elsewhere, then it's just a matter of us buying the whole business entirely. And when we're buying businesses too, I mean, we're not buying businesses for like 100% cash up front for the entire business. We're creating more shared risk deals that have payouts over time. This way, the seller really has to invest in the business continuing to work and also continuing to work long term for us all to have wins. Because otherwise, you could just throw a bunch of money to some seller and then they hand off a business to you and then they just walk away and they forget about you, and then you're left with a business that maybe doesn't perform right away or maybe fizzes out at some point, and then you're left with a business that you owe payments on that isn't doing what it's supposed to do. And you never want to lose on any type of deal. You always want to make sure that you're set up to win.
Can you tell me regarding like each case you said that is different in terms of it could succeed, it could die off. What was the, I would say, craziest or strangest moment you went through when you started your acquiring journey, and how did you overcome it? I mean, do you remember any kind of that difficult situations? Sometimes you're taking the businesses and they are not really work out, and for sure you're not realizing that right away. So you're going through some kind of difficulties, and what was the most strangest or difficult case in your end, in your opinion, from your experience?
Early in the year, our early acquisitions were not the best acquisitions, where we were buying, like I said before, beat up Chubbies. I would say one of those is a good example and something I could speak to. I can't name the company. I don't want to do that necessarily, but we bought this company that was averaging, I think it was like 15 grand in net profit on average over the last 12 months. Seemed promising, but it also was a company that didn't have marketing, advertising really driving it for about 3 months. It also had a 50K debt to Facebook as well, which is not good. Oh. And then looking at the history of performance, it really struggled post iOS 14 in 2021. So the second half of 2021, they weren't posting great net profit numbers. They really declined. They just couldn't figure it out, basically. And I acquired the business because I thought the business had promise. I also felt confident that my team and I, because my team has had success in over 150 verticals. We've managed over 20 million in managed ad spend. I was confident that we could step in and we can fix the post iOS 14 challenges and get advertising to work in this business, just because I'm just confident in my team. And then the debt thing didn't really scare me away, just because I was told that the debt was manageable and that there was a good relationship with Facebook and they were allowing us to make payments. I was like, okay, well, that's fine. Especially because he was selling the business to me for $0 down and much lower, and a lower price than the valuation of the company officially. So he gave it to me for like a steal in a way. But again, that was overall like a bad acquisition for us, because even with a rock star team that I feel like I have, it's still very challenging to get into a company and to get a company to work. Post iOS 14 Facebook ads. And even just marketing, advertising in general, it doesn't even have to have anything to do with iOS 14. If a company hasn't been really driven when it comes to sales and profits for some time, it's a challenging position to step into, because now you're getting that awareness again and you're trying to essentially get the business to work. And it's just a very challenging situation. I'm sure you can relate to that. And then the debt to Facebook, they were pretty light on us at first, but because we couldn't generate substantial profits in the business from spending money on ads, it was really just starting to anchor the business and really bring the business down, because they kept emailing us wanting a payment, and we were like, hey, we really can't make a payment. We don't have the profits to be able to budget this in. I mean, unless we get it down to this low of a payment per month. And they weren't working with us on that. And then on top of that, one of the top selling products had a poor product quality feedback from a number of amounting customers that we didn't see in the vetting process. And that's definitely something we've learned from since. And so just all those factors combined just led to us just finally, after 6 months of putting money, time, and attention into that acquisition, it really led us to finally saying, you know what, this isn't a good acquisition for us. It's not a good use of our time, especially now that we're buying really good businesses, buying profitable businesses, buying debt-free businesses, buying businesses that has marketing and advertising really driving the business on day one. We just need to let this thing go. Otherwise, we're just going to keep sinking money into it, which is what we were doing up to that point.
I completely understand the point, what you just mentioned about iOS 14 and 2021. I believe most of us were hit. I believe not even most of us, all the people who were related to advertising were hit it a lot. I completely feel your pain, to be honest with you. And if to go in terms of the acquisition of the businesses, do you have any kind of specific niches which your company working with, or you basically just looking in terms of the case?
Yeah, so I mean, we're buying any physical product e-commerce business that's a good e-commerce business. So if anybody watching or listening to this is interested in possibly exploring selling their business and getting a check every month for quite some time, feel free to reach out. We're definitely open to talking to any seller that wants to possibly sell their business. Right now, we all are leaning more towards supplement businesses. Not that we're exclusive to that. We're still buying just all sorts of different e-commerce businesses, but we are keeping an eye on supplement businesses just because we have an immediate opportunity in February, March of next year to roll up about 30 supplement businesses into a 8 to 9 figure exit that will take about 6 months to process. We have a strategic partner that's helping us do this. They already have buyers lined up to take advantage of this. And so now we're like, our staff that essentially like vets businesses for sale, they're really looking for supplement businesses right now, first and foremost, although they're presenting all sorts of different deals. So that's what we've been doing currently is we've been just looking at all sorts of different businesses, but really also having a strong preference towards supplement businesses just because we have that immediate opportunity to roll up a bunch of supplement businesses and then exit for a big exit.
Supplements right now, it's just growing so fast. We have so many potential clients who are coming out to us from Brazilian market, European market, American market, who want to scale their supplements. And they are doing that even organically, like 50, 100, 150K a month. It's just like insane, like the supplements itself. I would say Facebook not really like them in terms of what angle you're gonna use. It's super sensitive, but in the same time, but in the same time, affiliate and organic stuff, it's working dramatically for that kind of areas. Guys, if you listen to us, you have supplement business, you have a huge possibilities in next 6 months to join program of George regarding like making the exit on the great numbers, just to combine all the brands together. That's freaking awesome.
Yeah, you'll make more money selling your business in a portfolio roll-up and exit versus trying to sell your business individually. Like when you're trying to sell your business individually, you're going to get a lower multiple on your business. Plus, there's going to be a lot more room for negotiating. I know because I've been a buyer all year and that's what I do. I get the best possible terms before I move forward. And you're going to find that with buyers when you try to sell your business one-to-one. Plus, it's always smart to sell your business as it's climbing, not when it's peaking and coming down. Now you need to sell it while you got momentum before it's like, oh crap, it's too late now for me to max my company's sale value. You don't want to put yourself in that position. So that's why it's just always good to hear people and to talk to people and explore the possibilities of selling your business before you actually even think that you want to sell your business. Anybody that's watching or listening to this, to reach out, book a call with me directly. I'm on Instagram at Josh Scale, or you can just go to our website, ARM5Formula.com, and just have a conversation with us. And maybe it's a good fit, maybe it isn't. And if it is, we'll figure out the best way to approach that. It could be where we just bring you in the deal and we don't own your company whatsoever. You're just a part of the deal. This way we can help you guys break through and scale if you've had some scaling challenges. And this way you can maximize the valuation of your company and you could sell it with us when we go to sell these portfolio of supplement businesses next year.
All these details which you just mentioned, I will drop down under the video and in the podcast that guys are gonna be able to reach you out. But I would like to hear to go a bit deeper in the process of how everything is working, just to people to understand what's the process. Maybe someone as well like you is doing that on the higher or lower level and he would like to reach out and combine all the power together. So what's the basic strategy of acquiring one company? Let's say it's a physical e-commerce store which is generating like 100+ K monthly and high profitability. Let's say it's a jewelry store. What would you do? What's going to be step by step after, like you're going to negotiate, okay, it's understandable, but what's going to be step by step after you acquire them?
We've been bringing in about 2 to 5 investors per acquisition to help us really fuel the acquisition. So part of the exchange is that investors, they get a % of the profits every single month, plus they get a % of the future sale of the company. So it's a very smart investment for investors because you and I both know with e-commerce that e-commerce companies can grow and scale very fast versus traditional businesses when the company is in the right hands, like your hands or my hands with my company. And so investors really love coming on board, getting those profit share checks every single month, and then also being able to be a part of the future sale of the company when we go to sell. And so after we acquire a company on a letter of intent to buy, we then let investors come on board. We talk to investors, tell them about the company, show them everything so they can make a good decision upon due diligence. And then they buy a % of the company. And then they also pledge to give us credit line support too. This way we can scale. This way we don't have to worry about the cash flow limitations of a business, because most bootstrapped e-commerce businesses are limited because they're just depending on the cash flow, where we don't have to necessarily worry about that, because we're going to have 2 to 5 investors providing anywhere between 50 to 100,000 plus in additional credit to be able to buy ads and buy inventory, so we can scale fast as long as the numbers look good. So that's what we do, is we get investors to come on board, and then once we finalize bringing on investors, then we finalize the agreement between partners, or the acquisition. It's asset purchase agreement, APA, is typically what we're doing there, and then we'll put it underneath a new business entity that we create. And then after that, the business then goes to my operations team, and my COO takes over the business with the company, with the team, assigns a brand manager on my staff to the company, and then we start managing the company, bringing on any existing staff, driving marketing, driving advertising, and reporting results daily.
What kind of piece of advice could you give to someone who is in the shoes like your potential client? You give already one important: to sell on the rock. I mean, when you just scale your business, this is the best point to sell. 100% agree with you. Prices will be always the highest. And other golden piece of advice you can give to the business owners, so they will keep in mind to be ready to sell or give it to someone as a collaboration stuff, like acquiring on the person.
Yeah, well, that's a good question. I mean, I would say just, don't create a lot of debt in the business, if any. Keep the business debt free, ideally, because that's going to make you much more attractive to a buyer as well. And don't keep your eye on the ball.
Regarding the credit, it's actually, for me, it's a great question. I want to hear the answer. For example, if all of us, we are e-commerce people using Facebook ads and trying to use credit cards to get the rewards, to get the benefits. So in this case, obviously, it's not a real debt because we're paying instantly back, but like credit cards connected to the business, or you're speaking about 100,000 loans related to the business.
Yeah, no, I'm talking about not credit cards necessarily, and especially if the owner is managing the credit cards attached to the business effectively, and then of course the credit card is being paid off. It's like what we do with investors. We pay off their credit lines every single month, sometimes faster than that even, depending on how much we're spending on a per approval basis. But I'm talking about like debt to companies like Facebook, or debt to creditors that provide lines of credit on maybe bad terms. That's what I'm referring to. Keep your eye on the ball until the actual sale really does happen. Don't get lax during that process. Deals can fall through, for one, and you don't want to do that to your business. I went through that personally. I went through it like after that early 2021 partnership between that guy Adam that I mentioned earlier. After that went down and we partnered up, and I was CEO and I was running the ship, and I was bringing us all together, and I was fired up and I was motivated, and I was putting 60, 80 hours in, I don't know how many, but a ton, to get it to work. And this way we could all be successful, because we all wanted to build a portfolio of businesses. And that put me in a very tough position, because we had shrunk the agency, because we were trying not to be an agency. And then I had to go back to building the agency, so I had sustainability. So the bottom line is, you just don't want to take your eye off the ball. If you've got someone committed to buying the business, until you get that check on day one saying we're in, keep driving the marketing and advertising the business. So this way you've got a good business.
You already mentioned your details in the past, but guys, I will place all the details of Josh under our podcast. And I believe this is something which is related to all our audience. Josh, what the things which you are doing, I know only a couple of people on the market. So it's a blue ocean of the possibilities for the business owners, for companies like you, and in the same time, investors. By the way, about the investors, you said it's 50 to 100K in average they're investing. What's their monthly return, just to guys, maybe there is some potential investors for you. What's they can expect about the potential return and minimum investments in any kind of business with you?
So it depends on the business that they're buying. We're buying businesses right now, I would say between 10 and 20,000 in net profit per month on average. And on day one, they're making revenue, they're making profit. Like, we're not buying beat up Chevys. Those are some early mistakes that we made that we're not doing again. And so investors come on board, they get somewhere between 10 and 40% of that monthly. And they get that very quickly right away, within about 30 to 60 days from starting with us. once we have our hands completely on the wheel of a business and we're driving revenues and driving profits. And then at the beginning of every month, we report a profit and loss statement for the previous month. And then based on that, they get a profit distribution based on the percent that they have in the business. And that's long-term, so they get that for life. Plus on top of that, we guarantee that an investor gets back their investment in 12 months. So they're guaranteed to get that money back in 12 months or less. And we commit to that because we're confident we can do that because we're buying businesses that put us in a position to win. That's why we have that in every single investment agreement. And then besides that, I mean, they get that same percent in the future sale of the company. So if we scale a company, we sell it, let's just say someone buys 20% of a company for $50,000 and they've got 20% of this future sale of the company, we scale the company and then we sell it for $2 million. Well, they get a $400,000 check just from that, right? And that's a really good return. That's an 8x return off of a $50,000 investment. And that doesn't count the monthly profits that they're getting every single month leading up to that, which could be about 24 months of profit shares that they're getting. So very strong returns. You can't get those really elsewhere at this point. Crypto is, messed up right now. Stocks are messed up right now. Real estate is messed up right now.
Most of the other things, yeah. I was about to ask you this question about the returns and you already answered, and it's actually incredible, especially you just pointing out about difficulties in the market in our days. E-commerce is still only one niche. I mean, it's a huge niche which has several sub-niches, but it's a huge niche which can still be growing in the difficult economic situations and in the same time be profitable and just dramatically improve the value of each business in that area. I agree with you 100%.
Yeah, thanks, man. Yeah, I mean, e-commerce is booming. I mean, even with a looming recession, I mean, in 2022, it's expected to do 5.5 trillion worldwide. So, and it's still in its infant stages, so it's still growing. So there's still some big opportunities there.
Yep. So guys, we came till the end of the podcast. I just really looking forward to hear your feedbacks. And if you would like to reach out to Josh, all the details will be under the video and under all the podcasts. Just again, appreciate you to being on the podcast and looking forward to record. Maybe if the people will ask us in more depth, explain how your business is working or any new opportunities will open on your end. Looking forward to record a new podcast and share more values with our audience. Thank you for being with me on today's show.
Yeah, I'm honored, man. Thank you so much for having me on. I'm happy to come on board again after there's been some questions sent your way. And we've got a great Facebook group for Ecom investors that are interested in investing in Ecom. All you have to do is just go to ARM5 Formula /investor and it'll take you straight to the Facebook group where you could sign up for free. And you can get into that group. And I go live once a week. We deliver some great content in there just to help people be able to find out more about investing into a profitable, managed, successful e-commerce business. This way they can create some passive income for themselves and build their assets, and they can potentially ride the wave that we're riding currently. So we're bringing people on board that like to get on surfboards and ride the waves with us. Definitely looking forward to hear the feedback from the guys, and thank you so much for being with me, and have a wonderful day, Josh. Take care. Thank you, Anatoliy. Appreciate it, man.